My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Hey everybody, welcome to my trading game plan. Of course, my name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. As always, we're going to dive into the trades and the charts and the analysis. Number one, we're seeing the market starting to head lower again today. Listen, a couple weeks ago, I warned you guys we were on the cusp of a stock market sell-off. Just in the last week, the NASDAQ is down over 5%. We've seen software stocks like Oracle crater, and we're seeing even the semiconductor trade start to crumble. Even the memory stocks had a huge correction yesterday. This is going to continue. It's not going to be pretty, but I will guide you through based on technical analysis. All right, let's jump into the S&P 500 here, taking a look. You can see again, we are at the lows of the morning session. This was yesterday's low here on the S&P. You can see late in the day, we did have a little bit of a bounce back, and then overnight kind of traded choppy sideways. But now we are seeing further downside. Now, one little bit of interesting news this morning was the jobless claims numbers. These are filings for unemployment. Came in at 232,000. That was decently higher than the anticipated number of about 212,000 people filing for unemployment this in the last week. What does that mean? We don't know yet. It could just be a one-off, but we do want to monitor these numbers. If they start to increase week after week, it tells us the economy could be starting to weaken significantly. Again, one number doesn't change anything. It doesn't make a trend. But again, as a data-centric chartist here, my job is to monitor those numbers. I will keep you posted. All right, flipping back here, folks, to the S&P 500, and we've got a lot of stocks to go through today, as well as Bitcoin collapsing, silver collapsing. But again, here's your S&P chart. S&P ended down 0.5% yesterday, but more importantly, look at what's going on here. This is exactly what I discussed a week ago. We had this major trend line, which again, I've gone over day after day, but we have new people tuning in each day. We broke, we retraced, which is normal. Remember, support, support, support. Once you break support, it becomes resistance. What happens? It rejects price. And ultimately, again, we can see that happening in real time over the last few days as price again retraced to what I call the scene of the crime. We also talked in the last week about how this level was an epic level of resistance. You had two major trend lines converging. Price was below. Again, if price couldn't get through here of one trend line, what chance, you could ask, could it have of getting through two trend lines? Obviously, there's always a small probability, but because I'm a technician, I deal in a world of probabilities. And the probability of that happening was probably only 20% versus an 80% chance we see a sell-off. And that's exactly what we've seen in the S&P. S&P, again, will be setting up to open below yesterday's lows. Now, let's talk some levels on an intraday basis. On an intraday basis, first support is going to be 67.94 on the S&P 500. There is a gap fill there. If that breaks, we could be headed all the way down to 67.21, which would be my second intraday day trading level. Now, on a swing trade or longer term basis, I think this is the beginning of a much bigger fall. All right, much bigger. And that's what I've been saying. Listen, if you've been following me for even the last few weeks, you know I've been talking about this, talking about something bigger occurring. Remember, just in the last week, we saw silver starting to collapse, the first domino falling. Then we saw Bitcoin starting to dump out, and that's continued. Silver, by the way, down big today again. All right, so that's domino one. Domino two, what's last in the de-risking curve? The stock market. And that is now starting to fall as we are seeing. All right. So again, and by the way, keep in mind, it's not going to be in a straight line. That's not the way charts work. They have falls, then by the dippers will create a bounce, then they dip again, etc. All of that is normal. So don't expect a crash. I'm not expecting a direct 1 or 2 day crash, but I do think it will escalate over the next few months. Now, on a bigger time frame, this remains my short-term, like 2026 downside target, a move down to 6,100. If that gets breached, we go to the low end of the parallel channel, which is around 54 to 5,500. All right. That would be a nice big correction if we get down there. I think it would be about 20% on the S&P. NASDAQ, same sort of thing. You can see the same sort of pattern formation. We had this beautiful low from April, bouncing around in November, then again in December, then again in January, and in late January, we broke, retraced. There's your scene of the crime, and there's your rejection as the NASDAQ is setting to open up lower. Where's the NASDAQ ultimately headed, at least over the next, in my opinion, 2 to 3 months? I think we go back to 20,000 on the NASDAQ, and that will be a drop from the all-time high back in October of about 16%. Once we get there, you should get a very significant bounce. That's going to be, at least it should be, major technical support. Now, again, does it mean the markets are going to go to new all-time highs? Honestly, I doubt it. But again, I'm not going to pretend to know for sure. I will just monitor the charts and we'll watch the levels. Okay. So again, I will be here as always, the game plan Monday through Friday at 9 a.m. Now let's get into a few other things. One thing that's catching my eye, the 10-year yield making a little bit of a drop today, likely on those higher jobless claims numbers, as again, that could raise the issue of a potentially weakening economy. However, don't forget, this is still above key support. As long as this 4.2% level holds, this actually still favors a move to the upside. And I still think yields are telling us inflation is going to uptick before it starts down ticking again. And we should all be seeing those numbers. I believe next week we get the CPI data. I'll have to confirm that. But the CPI data should reflect about a 15% move up in oil in January. We saw the move in silver in January and the other metals, copper, etc. We should start to see that coming through a little bit in the CPI data and in the coming months as well. All right, now we get into earnings, guys. Earnings levels. Let's talk. So Google/Alphabet reported really good numbers, but they're starting to have issues. The market is not as forgiving anymore, especially on a stock like Alphabet that was at all-time highs just days ago. What's going on here? The same thing that's going on with Oracle. These companies are spending hundreds of billions of dollars. In 2026, Google said it would spend $170 billion on basically building out AI. Now, the issue there is a year ago, 6 months ago, this would have been shooting higher. But now investors are becoming more aware of this massive spend, and they're starting to ask, all right, if you're going to spend $170 billion, what type of return are you going to get on that? Because now we're starting to see so much spend. There's not everyone's going to be a winner in this game. There are going to be losers in the AI trade, right? In the AI game. And so the question is, are these companies overspending and then, again, essentially flushing money down the toilet? And we're going to find that out. But right now, investors, even with a fantastic quarter, here we have Alphabet trading at $315. Now, if we go to the daily chart, you can see literally 2 days ago, it was at all-time highs. Now it's coming in hard. First day trading level for me, there's a gap fill right here and pivot low at 296. That should be a major technical intraday day trading level. If it gets through that, what are we looking at as our next major level? Probably a move into this zone here. There's another gap and a little former gap there around 275. Where would I swing trade this? Oof, it's going to have to come in pretty hard. I'll show you guys here. I would say right in this level. See this trend line, high pivot, high pivot, high pivot, and low pivot right there. This would probably be my first level around $240 where I would actually feel comfortable picking this up. Look at the run that this stock has had from $140 up to $350 in a straight line. Well, almost straight. I mean, it had small pullbacks along the way. You got to let this thing correct. The other thing to do your Fibonacci retrace. Let's take a fib and bring it up. And what we can see is that's very close. This trend line around 240 is very close to our 50% Fibonacci retrace, which is right in the wheelhouse. My favorite fib retraces of sharp moves like this, the 50% retrace and the 618 Fibonacci retrace. Those are usually good. You want them to align with other factors, though. Again, the more factors you can align, the better probabilities you're going to have of being correct on any single trade. All right, Qualcomm. Nasty sell-off in Qualcomm, folks. Again, Qualcomm and ARM Holdings, both chip stocks. Take a look at ARM Holdings getting hit as well. If we go back to Qualcomm trading around 132, if we go to the daily chart, look at this, guys, here. If we go to the daily chart, look at this. We have the low end of a parallel right here, and look at where we are. We're right at that level. So this is going to be an interesting level today. I won't trade this level because it's already hitting on it pre-market with significant volume. When levels pre-market hit with a lot of volume, I'm always more careful because it's been hammering on that level with volume. If it was like 100 shares, doesn't matter, right? That's inconsequential. That could have been a market order by accident by someone. But this is significant volume. So my first day tradable level is going to be this pivot low at $121 today. All right. So Qualcomm 121, that'll be a day tradable level. On a swing trade basis, if this parallel is breaking, it's likely going much, much lower. I would consider swing trading this between 100 and 110. There's a gap fill. I know it's hard to see. Gap fill here at 110, and then pivot low right down here at about 103. All right. Now, ARM Holdings. ARM Holdings was down more. It's come significantly off those lows, but still trading down decently on the day. We flip over to the daily chart. The only level I will even go near this today would probably be if it flushes down to this pivot low at 80.5, and there's a gap fill here at 77. That is a huge technical. Look at the major pivot low and the gap that has not been filled just yet. And again, for those of you that are new, why is it a gap? Because this day it closed here. The next day it opened here, creating the gap. All right. And when gaps are filled in technical analysis, there's usually significant support on the way down, as this would fill from above down into that level. So that would be my day tradable level there. Now, let's talk about earnings wise. We're going to pass on the rest of them. Snapchat came out, not really a major move, a few other ones. All right. Now, what I do want to discuss is other charts that are starting to look interesting. I've had a lot of negativity in this game plan. I get that, but that's what the charts are telling me. But there are opportunities here. I think the software stocks are so beaten up that they almost look so bad that they're good. Sentiment is so bad, it's honestly flipping to bullish, in my opinion. What do I mean by that? Well, look at Oracle, and I've talked about this level prior, but look at Oracle trading below 145. But look at this trend line going back to October 2022, right through this low in April of 2025. And look, this is right around $140, only $5 away. Look at the drop on Oracle, almost straight down from $345 to about $140 would be that level. That to me looks great as a swing trade. Now, just because it's great doesn't mean I go all in on a position, right? I want to be clear on this. Generally, when panic is hitting, stocks will pierce lows. Just like on vertical moves, you could have a great resistance and the price can go above it briefly or for a little bit of time before it corrects. And so what I always do is I dollar cost average. I start with, let's say I like that level significantly. I might buy a quarter of my total Oracle at that level. If it bounces right there, no stress, easy win, boom, 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 I make money. If it goes lower, I'll add every, let's say, $3 to $5 lower, allowing me to weather any further panic. Because remember, while the markets work on technicals beautifully, they also do behave irrationally for short amounts of time, aka silver, when it was running from basically $100 to $120. That was irrational. That was emotional. That was a short squeeze, whatever you want to call it. And then price collapsed, right? I mean, you could say the same thing about almost anything. SanDisk, for instance, had this ridiculous surge up. Now it's starting to correct sharply. All right, might be getting a nasty topping tail on the weekly chart too on that. But again, that's just how I trade it. Now, Microsoft, look at this, guys. Microsoft's a great company. Look at the gap fill and look at the secondary factor of the trend line merging right here around 395 to 390. That to me looks like an amazing swing trading opportunity. So remember, from fear and panic come opportunity to go long. From greed and euphoria come opportunity to go short. The idea is that you as an investor, you as a trader, you want to ground yourself with logic, and charts allow us to be more logical. And that's where we don't get carried away with what's on the narratives of mainstream media or on the social media hype. And both ways, right? Greed and fear on social media. It amplifies it. We're bombarded by so much emotion out there because of social media. You got to ground yourself in the charts. At least that's how I do it. All right. A few more charts to go over. We just talked about SanDisk. SanDisk trading down again today. Look at that beautiful doji. But if I flip to the weekly chart, watch this. This right now would be a weekly topping tail. Huge potential top signal. I think you likely trade within the next 3 months down to about 285 on this. I know that would be a massive correction, but I actually do think maybe we'll give it 6 months. Palantir. Now, Palantir, look at the drop on this, folks. Incredible collapse to the downside, trading down again. I'm going to start nibbling on a quick trade on Palantir around 124. Former pivot high. Notice it hit, rejected, broke above, consolidated, and then went on its run. There should be a lot of support around 124 to 125. And then look at Robinhood, folks. Again, I was saying this was a ridiculous price up here months ago when it was trading up here. No sense of reality. And now look at it. It's coming down to a potential buy level around $66 per share. There's also a little gap fill around 68. Basically, anything 68 to 66 looks enticing to me. All right, now let's flip over to Bitcoin. Bitcoin. Man, this is wild stuff, guys. All right, so Bitcoin is in the gutter again, falling sharply down about 5% on the day, but I'm actually flipping bullish. I picked up some IBIT this morning with Smart Money stocks and ETF members at verifiedinvesting.com. It's in our live portfolio where you see the exact amount of share size that I did, my P&L, everything. It's a new thing we launched. Total transparency, literally share size, cost basis, current cost or amount of in the position, and P&L moving in real time. It's super cool. But in any case, I picked up some IBIT today down here. Not a full position, because it could go lower. But why do I like it? Number one, all of these technical levels here, but also look at this right there. Your bull market 2021 all-time high or prior all-time high. I think you're due for a bounce in Bitcoin. I also like MicroStrategies down here as well. Again, am I going to go all in here? Nope, because this is fear and panic, and fear and panic can drive things lower. So I have to use that knowledge to my advantage. I'll put orders every so often a little bit lower to dollar cost average, building my core position for a bounce. And then as I get in the money, I take a little off, get in a little bit more money, take a little off. That's money management 101. Such an important factor here in trading and investing. All right, so Bitcoin again is below 70,000 at 69,000 and change, hitting the 2021 high. Now let's go to silver. Silver, another big mover here. All right, so let's take a look. Silver is getting absolutely crushed. Look at this, down 15, almost 16%, but it hasn't taken out the low. Do I think it's eventually going to take out the low? Yes, I do. And ultimately, I'm putting all my buy orders between $54 and $50 on silver. Huge level there, okay? But huge down day. It honestly got less of a bounce than I thought. I thought, and I said this yesterday, I was like, all right, so silver may go up to the 50% or the 618 retrace of that big move down. I guess that was on Friday into Monday. It didn't. It only went to the 382 Fibonacci retrace, and that's it. That shows you the de-risking is legit. Because again, think about what's going on in Bitcoin and the stock market. It's not allowing silver to get the normal bounces. It only got a 382 Fibonacci retrace before this next move down. So ultimately, again, am I in a silver trade? No, I'm not actually right now. Right now, if it had gotten up to the 618, I was going to short it again. Didn't give me that opportunity. So be it. I'll wait patiently for it to flush more, and then I'll start accumulating when it gets down there. But yeah, what a drop on silver today. Let's take a look at gold. Now, gold is holding up better. Why is gold only down 3% and it's not even close to the recent lows versus silver is close to the recent lows? Number one, major support here. Number two, gold is still a safe haven asset. It's still an asset that central banks are buying. And so again, silver got way ahead of its skis, emotional. Gold, yes, it did, which it had to correct, but it's probably going to get some money flow from the stock market and from other things that are de-risking, including maybe Bitcoin. And so therefore, it is holding up better. And I would anticipate, while it still may go lower, I still think percentage-wise, it'll probably outperform overall in the next few weeks and months. All right, quickly, let's go on to U.S. oil here. Oil today coming in just a little bit. It's still holding up relatively well. Here was your breakout, then your retrace. Again, as long as it holds 61.25, I would remain bullish on it. If it gets below that, it could go back down to this $55 level. We'll keep an eye on that. And then natural gas, we had that great pullback about a week ago, but since then it has not done much. It kind of had the big drop here, and then it's just been inching up. No trade on this asset for me today, not even close to a level. So listen, we have the charts, we have the pieces of the puzzle. Remember, charts are giving you essentially pieces of a puzzle that it's our job to put them together and see what they're telling us. Now, again, one day we could think it's a cat on the puzzle, or the next day a dog. But the point is it's information that we can utilize, and this gives us the ability to make essentially conclusions based on probability, which is everything. So in all, folks, I got to get going to my trading room. Please feel free to join us in there. These action-packed days are amazing for day trading. It's called the Apex Live Day Trading Room. And as always, folks, I'm here for you. I will be back, obviously, tomorrow at 9 a.m., and members will get their videos later in smart money stocks and ETFs for me to go over every nuance, the key trades of the day, etc. You guys have a great one. I'll talk to you soon, and thank you. Take care.